All right, guys, today's topic is leaving the door open in a downward market.
Yeah, guys. So very first thing is, what is leaving the door open? So just so you guys know, leaving the door open is essentially when you make the seller agree to sell their house to you with a contingency.
And how you use that contingency is up to you, but you really just want to make sure you have a timeline to commit to buying it after you agree. So, quick example, hey, Mr. Seller, I know we said we might be able to buy it at $300,000 for the property. If we did agree, we would just need a 2-week inspection period.
Boom.
Let's keep it simple. If you guys want to know more about leaving the door open, we have tons of videos on it. And if you got this far, just like and subscribe.
Oh, yeah, definitely.
All right, so where do we want to jump in? So I guess, first off, we know what leaving the door open is. Now, it's to understand the importance of a downward market. So if you don't know we're in a downward market, I guess shame on you, or good for you that you're doing so well that it hasn't affected you yet. But in our market in New Jersey and Pennsylvania and a little bit of Florida, we have been seeing a little bit of a dip. And there's a few ways you can kind of see that. Some of it is just looking for sale, seeing price cuts. If you're seeing price cuts all over your area, that just means properties aren't selling how they were 3 or 6 months ago, where everything was going above asking. So it's just one tell on how to see you're in a little bit of a downward market.
Yeah, and the reason why you want to know whether we're in a downward market is just to see how certain tactics are going to work better in an upwards market versus a downward. So it just so happens that leaving the door open works really well in a downward market. The reason why is because, so there's high interest rates right now. If you're wholesaling, you need to know where buyers are buying, but a lot of buyers probably don't know where they're buying because they're waiting for some ARVs to pop up. You can't use ARVs from 6 months ago because it's not the same market, right? So they're kind of like trying to figure out where we are, and so are we, right? So by leaving the door open, you set the right expectation to the sellers that, hey, I'm good at this price. I'm about 80% sure. But in order for me to get 100%, I do need to get my partners in there. I do need to get some contractors in there. And you're not lying, right? You feel like this is the buy price, right? Like this makes sense. But if you want to be 100% without misleading the sellers, just tell them that you're 80%. And get your buyers in there, get your contractors in there. Let them confirm that they are good at that price point.
Yeah, guys, it's super important to really just blame a third party on you needing some time to confirm the renovation or the price point on where you're buying it at. And if you say this before you sign, you're not the person that's under-delivering and over-promising. You are doing the opposite. You're making sure you let them know up front, hey, listen, I'm not sure if I can buy this, but for me to get to 100% sure, we got to put this on paper so I can get my third party, whoever you want to say, in. But the reason why this is so important in a downward market is there's so many different people trying to get deals right now, right? Everybody wants the few houses that are good deals. So the people that maybe need some time because they need to find a place to go, or, just aren't really ready right now, but they really like you and the price makes sense, sign them now, because what that's going to do for you, especially in a downward market where there's not as many deals, you now have, hey, I'm 80% sure we can buy it. Every quarter, we're going to review the price point until you're ready to move forward, just because the market is changing. And in 3 months from now, if it keeps going down, crashing, we probably can't even buy your house, just because what would we be buying to make money with if, the house, after we fixed it up, is selling for what we bought it at because of just how far down it's going every month. So if it's okay with you, we can agree. Then every month or every quarter, we'll just review the price point based on what's going on in the market. If someone's open to that, sign them now, because even if the market doesn't change, then you have a great deal. And if it did, now you have somebody on board with you to figure out where do you need to be price-wise for this to make sense for both of us. And if it doesn't work, it wasn't a deal anyway. And if it does, you just added a couple of extra contracts and potential deals to your pipeline in a market where there is a scarcity of deals.
Yeah, and that's more for like the long-term play, right?
Yes.
For the short-term play, once again, right, like you just want to make sure that there's a lot of crazy things happening, right? In a month, you don't know if the Fed's going to raise the interest rate, and maybe you were borrowing money at 10% and now it's up to 14%. That's going to like definitely affect your numbers. So make sure you get a commitment from the seller and make sure you got everything situated, because there's going to be less meat on the bone now. Right, it's not going to get better. It's only going to get worse, right? I don't see ARVs going up. I only see ARVs steadily going down. I only see interest rates going up, not going down. So every little thing matters, because if the ARV today is 400,000, based on where you at, that might turn into 390 or 385, right? Like in a couple of months. So if you don't have all your numbers airtight, or if you're a wholesaler, right? That 10, 15,000 that maybe the flipper is accounting for, right? Maybe you're running at a 400 ARV, but the flipper's running it at 380 because he or she knows that it's on its way down. But yet you're trying to put a 20K wholesale fee. That's your spread, like Jagger said. So this is why leaving the door open matters so much in a down market.
Yeah, guys, it just covers your bases, right? You want to make sure you're protected all the way through until this deal is closed.
Yep.
And more importantly, your reputation's protected, right? Yes. If you start lying to sellers, tell them you're 100%, and then you can't take on a couple of these deals because you're going to lose a shit ton of money. Now, one, you buy it, you don't have a business. Two, you don't buy it, you look like an idiot because you told the seller you were going to do something, and who knows their situation, how important this is to them. That's why I don't ever put myself in that situation, right? I'm going to be like, hey, I might be able to get this done, and if you want to take that ride with me, in today's market, with it changing, I'm going to have a few weeks to just confirm this. If I was an expert in construction, I'd tell you right now, but I'm just the guy trying to help figure this out with you. So now you actually have an opportunity to get your experts in there or your buyers in there to then tell you, hey, we can actually get this done. Because there's nothing worse in a downward market than a seller trusting you and actually trying to get it done. Then you lied to them and you couldn't. Now they don't trust anybody. And now they might sell their house on the market and make out better, or can't sell it, and then the interest rates go up more and they lose money.
Yeah.
So at the end of the day, leaving the door open in a downward market is super important because it just covers your tracks when you're dealing with a lot of money in a time where you don't know if you're going to make as much.
Yep. Yeah. And the number one, like, I guess, pushback that we get for this tactic or whatever is always, right, let's say I tell Jagger, hey, Jagger, yeah, I think I'm about 80% sure I can come in at your 300K mark.
Okay.
Like I told you when we first spoke last week, even if we do come to an agreement and we put this on paper, that I'm still going to need a week to confirm the price point.
Ronnie, I appreciate you telling me you could buy it at my price, but how about we just get in your guy first so we don't waste our time, and then you tell me if you can buy it?
That makes a lot of sense. Here's why we can't do that. And if that doesn't work for you, that's completely fine. But in order for me to get my guy out there, I do have to pay him. And you can, even if I do send my guy out there, he does what he needs to do to confirm, you can call me tomorrow after I do all this and tell me, hey, Ryan, I signed with somebody else. And imagine, we do a lot of flips. We do about 50 a year. So imagine if I ran a business just based on paying these guys and not having anything in place. For one, they're probably not even going to go out there because, I don't even have a deal yet. So.
Oh, okay. So you need us to agree, definitely, and then we'll get the contractors in.
Correct. Yeah. And like I said, I won't, if you're okay with a week, normally that's what we do. That's great for me. In a week, you'll know yes or no, whether we're going to move forward or not. And, if it doesn't work after a week, we rip it up.
Boom. So what he did there, guys, he didn't overpromise. He didn't underdeliver. He let the seller know, hey, we might be able to get it done, but we have to agree today so then I can get my guys in here. Oh, wait, why do you need to get your guys in? He just let us know why, because he has to pay for resources for people to actually come take a look. And if the seller's understanding that, and they will give you that time, use it. If they won't, we're not saying don't buy their house. I completely understand. Usually that's what we do. And in today's market, we just want to make sure we're protected because of how everything's going. But if you're telling me the only way I can buy your house is if it's 100% and I have to go see it, let's put it on pause. I'm going to get my expert out there, do this a one-time thing. He'll take a quick look. Then we'll go over the numbers together and move forward right then and there.
And even then, guys, if you go that route, I set the expectation like, if you can't leave the door open, then you set the expectation that if you go out there, if you get your professional out there, so whether that's a contractor, whoever you want, whoever that third party is, you set the expectation that after that walkthrough, assuming we can confirm everything and the price works for both of us, we're signing right then and there. If they don't say yes, I don't go out.
And there's a few reasons why, but we won't get into all of that today. But the point is, you can leave the door open, try it on every deal you get, and the ones you can't, then that's the one-offs, right?
Exactly.
You're not going to do 20 properties a year deals, 20 of them are leaving the door open. No, if half of them are, and you had an opportunity to then renegotiate, which we'll get into another video of how we renegotiate these leaving the door open deals, that's awesome. And if they're not open to it, we're not telling you don't buy their house. You just have to go at it a different strategy. Yeah, guys, and it's super important to protect yourself in a downward market, and we hope that this sales tactic can help you guys in your business. And if you have any questions, comments, or just want to subscribe, click right here.
Yeah.